Hello everyone. We know on Monday night, US market closed significantly positive because of Fed Vice Chairman's comment. So yesterday early morning compared to Monday, global momentum improved. On top of that, in Money Control TV, yesterday early morning, they conducted the interview with Kotak Mutual Fund CEO Nilesh Shah about this Isreal conflict and how Indian mutual fund will be addressing this. He said he is looking this as an opportunity by chance if FII wants to exit their position means. As per his statement, at present, mutual fund is sitting with a dry cash of as much as 2.5 lakh crore rupees and also through SIP every 3 months roughly they are getting 45,000 crore rupees. Unlike in the past where domestic institutions don't have deep pocket and now if foreign investors want an urgent exit, today mutual fund industry alone has the firepower of 2.5 lakh crore rupees to deploy. Again, he explained all the logic, how and where the funds are present, etc. For example, in one scenario, in his balance advantage fund, he can go up to 80% in cash market, but at present he is at 42%. So they are looking for the opportunities to enter the market if it arises either by this MSA rebalancing or any. Just for info, Kotak Mutual Fund is the 4th largest mutual fund in India by assets under management. So its CEO's word carries the weightage and this 2.5 lakh crore rupees pile of mutual fund cash becomes the immediate talk of the town. I mean, yesterday most of the financial TV channels asked about this mutual fund cash availability to various fund managers, which indeed provided the psychological bullish tone on the market. On top of that, Indian property market research group Anarok Research released the report about housing sales on top 7 cities across India in the last quarter. And as per that, the new luxury home sales increased 36% year on year to a new record of over 1.2 lakhs unit sales. Then they said they expect it to continue as long as we have this stable repo rate. Now this report with the recent property company sales update which released last week made the realty sector index to increase over 4%. In addition, yesterday afternoon, IMF increased the present year Indian GDP growth forecast to 6.3% from earlier 6.1%, and also there are news about the possible stimulus package related announcement in China. So all these positives made the Indian market super bullish and in one single day Nifty increased near 180 points. Just for info, in the Nifty 50 stocks, yesterday only 5 stock was down. That's too marginal and due to stock specific reason. All other 45 stocks increased and closed positive. However, even yesterday FII was net sellers and it's for the 15th straight day. Yesterday the net sold for 1000 crore rupees and DI net bought for 1960 crore rupees. Then coming to US, another 2 FOMC members. First, Atlanta Fed Reserve President Raphael Bostic said in the American Bankers Association that he don't think that Fed need to increase the interest rate anymore. Then second, Minneapolis Fed President Neil Kashkari echoed the same remarks. Now, because of this 2 FOMC members' remark last night and the Fed Vice Chairman press conference on Monday made the Fed monetary watch tool prediction to drop to 13% chance from over 30% chance last week that Fed will increase the interest rate in the upcoming FOMC meeting, which indeed made the US market positive and closed positive as well. In the end, in US, Dow Jones increased 0.4%, S&P 500 up by 0.52%, whereas Nasdaq increased 0.58%. Regarding US FIIs, it decreased near 4% and moved to around 17 from near 17.7 on Monday. About oil, it stayed at the same place roughly. At the time of this video, WTI crude oil closed at near $86 per barrel and Brent crude oil trading near $88 per barrel. Then in case of Indian ADR, in line with the Indian market, all closed positive but less positive. I mean both Infosys and ICICI Bank in Indian market increased near 1.5%, but in US it increased just around 0.5%. Similar trend was observed in both HDFC Bank and Wipro as well. Just for info, day before yesterday on Monday night, IT was more negative than Indian market, whereas in terms of banks, it was less negative than Indian market. Equating all those arbitrage, I come to the conclusion it's indicating IT as negative but banks to trade as neutral. Let's see. Regarding Reliance GDR, it's similar to IT. So far, it doesn't recover all its losses, so kind of indicating negative. Again, this also showing the rift between FII and DII as both want to control the Indian market. About GIFT Nifty, early morning it closed at 19,776. At present, from zero premium on Monday, the premium increased 40 to 50 points to spot Nifty. So kind of indicating gap up opening of 30 to 50 points. Let's hope Nifty to open above 90,700 and sustain throughout the day. So that's what happened on global market. Now let's move to the India specific info. First, as most of us know, today in the aftermarket hours, around 5:30 p.m., TCS is going to announce their Q2 results. At present, the expectation is their revenue to increase 1.3% in quarter-on-quarter basis in rupee terms. Similarly, the profit after tax to increase 0.8%. On top of this regular stuff, market expects TCS to show the order bank of 11 to 13 billion US dollars and expecting TCS to announce at least the buyback shares of 22,000 crore rupees. So these are the 4 items we need to keep tab on TCS results: revenue, profit, order bank, and how much money buyback announcement. Second, yesterday in the aftermarket hours, RBI banned Bank of Baroda's mobile application for adding new customers. They cited they want Bank of Baroda to fix its security concerns first before adding the new customer. Third, yesterday night in London Stock Exchange, all the base metal price fell despite the possible stimulus package related announcement in China. So there is a chance that might impact our metal stocks today in our market as well. As a summary, it's exactly similar to yesterday. Global momentum is good now as we got some level of certainty that there won't be any interest rate increase this year. So US market closed positive and GIFT Nifty indicating a gap up opening of 30 to 50 points. However, Reliance GDR and IT stocks ADR indicating negative trade is a worrying sign, and in case of banks, it looks okay. As per stock open interest, ICICI Prudential Life Insurance, Biocon, Container Corporation of India, Abbott India, and Jubilant Footwork got an increase in open interest along with a negative close, indicates the short buildup. On the other hand, Birla Soft, Chambal Fertilizers, Hindalco Industries, Dalmia Bharat, and Escorts got an increase in open interest with a positive price close, which means these stocks got the long build-up. Regarding the things to look out, as I said earlier, TCS quarterly results. Then about macro, at 11:30 a.m., there is a schedule for release of German's consumer inflation, and in the aftermarket hours, US Fed FOMC minutes of the meeting held in September will be released. Coming to technical, Nifty opened a gap up yesterday, which was day's low and continued to go higher throughout the day to close with a positive of approximate 177 points. Thus, on the daily chart, it forms a long bullish candlestick pattern with minor upper shadow and no lower shadow, which means a bullish opening Marubosu pattern. Actually, it started to form a higher bottom and also breached the previous swing high, confirming the trend reversal. Here, it not only got back above the 50-day exponential moving average 19,560, but also moved above the 20-day exponential moving average 19,650 in a single session. However, the momentum indicator still has a negative crossover, so the next immediate resistance or the pullback is likely to continue till 19,778, which is the 20-day simple moving average. And the strong resistance is at 19,883, 61.82% Fibonacci retracement level of the entire fall from 2022 till 19,333. On the downside, the swing low of 19,480 is likely to act as a short-term support. Then, in case of Bank Nifty, it too opened gap up and continued to increase higher throughout the day. It held on to the support zone of 43,800 to 43,700, where the previous swing low supports were placed. And I expect the pullback to continue till 45,000 over the next few trading sessions. On the options front, the maximum call option open interest is at 20,000 strike, followed by 90,800 strike, with maximum new call writing at 20,100 strike, 20,000 strike. So the data suggests that Nifty may face resistance at 90,800 to 20,000 in the coming sessions. On the downside, the maximum put option open interest was at 90,600 strike, followed by 90,500 strike, with a new put writing at 90,600 strike, then 90,700 strike. Thus, this options data indicating that 19,600 19,600 to 19,500 is expected to be a key support area in the immediate term. Similarly, on the Bank Nifty, strong new number of put options were added at 44,000. Hence, 44,000 is the immediate support on the higher side. 45,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.